Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a wild week that had traders astounded, investors confused, and hedge fund managers bloodied and scrambling. Everything looked fine to start the week as Monday saw Apple move up 4% on an upgrade, and GameStop astounded traders approaching $160 a share. It seemed outrageous. Then talk came about a delay in fiscal aid, and that sent the stock market down on Monday really quickly, a quick 65 points to the downside for the S&P 500. But then as buyers came back, we rallied back near the highs of the day. Tuesday, market was frozen as the eyes of traders glassed over as they were watching these stocks that are getting squeezed. And these stocks just absolutely soared to levels, well, just was incomprehensible. For those not familiar with this story, it was a Reddit group, our Wall Street Bets, that has over 1 million members that figured out a way to exploit a certain weakness in the market. They took advantage of the short sellers and with their group power engineered a massive short squeeze. It actually started a month ago when there were bullish comments that were kind of going around that forum talking about GameStop. And it actually went from that time, which was getting a little bit of lift, into a total frenzy. This frenzy attacking all stocks that had high short interest as these stocks went to levels that I'm telling you beyond any comprehension and anything I have seen in 46 years as a trader. Wednesday, the squeeze in the spec stocks went stratospheric. And after the FOMC news came out and they said really no change, and then the market moves down pretty significantly. S&P 500 fell over 100 points very quickly. The Dow down 130, and as investors were clearly shaken by a market that no one any longer understood. Thursday, GameStop overnight traded up to $500. This is a stock that was a $3 stock not all that long ago and had an existential threat. Was the company going to survive in this environment that we were trading in? Well, the stock market moved up and was pretty strong, recovering from that Wednesday decline until the close and started to move down again after that. I believe that was going on here on Thursday, that the rally was really caused by the hedge funds. They really had to look hard and reevaluate their short side risk. All of a sudden, that which seemed like they could calculate, like they had some sense of, well, they didn't have any sense of it anymore. All of the parameters they had about risk are thrown out the window. So they scrambled to buy stocks, buy call options, and big moves came after that as Robinhood and other brokerage firms, they restricted trading, and some of them went to closing only in trading in those highly speculative stocks. So with all this scrambling that was going on and all of this massive trading, it was really utter confusion. When there was a lot of criticism about the brokerage houses And you got to really wonder about who was capitalized properly or not, and some of them had to raise money, and some of them are being sued by because that traders, investors wanted to be able to trade, but they were essentially shut down. But it's really the job of those brokers to protect their company and to protect their other account holders. So it's pretty hard, in my opinion, to criticize them for doing something that seemed very prudent at the time. And still allowing closing trading is the right thing to do. Friday, we saw the markets, was weak overnight as worldwide stocks were trading to the downside. Since trading was resumed and you could open trades again in these speculative stocks, they started to soar again. And the market was highly volatile here on Friday. As we were talking, traders were talking about the reflation trade. And what that was doing was sending bonds down and gold and silver up pretty strongly. And I have a lot to tell you about silver a little later in the show. I think for the stock market, it's a reflation fallacy because that's already baked in. We already know about all of this reflation that's going on. So yes, it can affect gold and silver and affect the bond market if that's true. But stock market, I think it's already priced in. And as rates go up, I think stocks go to the downside. The stock market has entered, in our opinion, a very historic time. You should really watch the big picture analysis that I did for members on Thursday, where I talk about the craziness that we're in now and compare it to other times in the past when there were things that went on that were maybe somewhat similar, like 2000 when the prices went extraordinary, and in, of course, 1929 when that happened also. So, we don't know if it's like any of those or not at all, or worse, but this is certainly something we have not seen before. A stock like GameStop, they should just rename and call it insane stock because it has nothing to do with the company anymore. There has been a complete detachment of stocks to companies. And originally you would buy a stock because you would get a percentage of ownership, but that has nothing to do with the reason why people are buying stocks or these stocks right now. And what has been driving up the stock market during this period of time, the Fed money that's been coming in, the hope for fiscal stimulus, more debt, all of that, it's been completely crazy, but not to the level that we see right now. Now it's pure insane gambling. Markets have become a casino in what we're seeing there. And most investors, they're not going to understand this. They're going to want to lower their exposure. They're going to want to retreat from what looks like an environment that they have their money in that makes absolutely no sense to them. Talk about no sense. They mentioned, the Redditors mentioned Dogecoin. It goes up 800%. Elon Musk put the word Bitcoin on his Twitter profile. It goes up $5,000 today. Can you imagine this? Stocks moving up $2,000 just because of some social media mention. This is insanity. I'm telling you, 46 years at this, there's been nothing like this. I've traded every bull market, every bear market, every crash since 1974. Can you imagine that? And I've never seen anything as absolutely wild as what's going on right now. So when I talk about investors being nervous and this detachment from reality, I think we're seeing that in what we see the markets right now. Silver is another one that they're aiming at, and I'll show you this in just a few minutes as we look at multiple time frame analysis in silver. And all of the markets now, because they're moving up, they are in pure air is what we're seeing. There's absolutely nothing real that we're looking at. Well, silver is something that's a little more real, and I think there is an opportunity, and I'll show you that in just a moment. For the last couple of months, I've been talking about the end of January bringing us a period of risk. And that period of risk, I thought, would see 6 to 10% on the downside. Well, that period of risk is here. And don't be surprised if it's actually worse than that, because when I talked about that analysis, I had no idea of the insanity that we're going to be seeing right now. And we could see some pretty big days to the downside coming right in here, as investors flee a market that there's no way they can understand. For the week in here so far, the major indexes are down about 3% across the board. I want to coin a phrase right in here. I think the stock market is now diseased with SpecVid21, the SpecVid21 virus. If you hear it anywhere else, they took it from me, because that is where I think we are right now. Speculation virus discovered in 21. That is what we see going on in the markets right now. Right now down only 3% on the day, and it certainly could get worse. Bonds, 30 years, they are about unchanged. The TNX, the 10-year, has about a decline of about 5 basis points. So that has another steepening of the yield curve going on. The gold market, up about $5 on the week. It's recovered now because of what we're seeing, and that's led by silver on the upside, which has had 2 very, very big up days. So make sure you watch this analysis coming up in just a few moments. The dollar firms a bit, up about 0.3% on a safety bid. Oil up about 65 cents, again, because of that reflation bid that is coming in the markets. So that's the opening. I want you to be sure that you go to askSlim.com. Make sure you explore our website. If you're watching here on YouTube, do subscribe to this channel. Click the notification bell, and you're going to get notified when we put videos up, which we do fairly regularly with unbelievable great information and teaching that we do on there about the markets. We have a great staff, 3 analysts on staff, myself and Matt and Arvi bring just phenomenal things. If you like this video, make sure you do give it a thumbs up. That helps us, and follow us on Twitter at askSlim, when I'm always putting stuff up there, and sometimes it's political stuff. That's kind of where I put that kind of commentary up there. So you might enjoy it or you might hate it. Write to Matt at askSlim.com. Matt is our COO, and he will be able to give you membership information if you have questions about our huge offerings of education and analytical material that we put out every single day. It's astounding the things that we put out to support traders and investors. So please do make sure that you do that. So now I'm going to do something a little different. I'm going to share a silver analysis with you. This is multi-time frame analysis that we do. We do everything that we do is multiple time frame. The reason for that is because our work identifies the rhythms in the market cycles, or the heartbeat in the market as they call it. And we add in momentum indicators, support, resistance, other key proprietary studies that we have. All of that to get a sum of the evidence and looking for the highest probability of impulses. In other words, where the market is likely to spike in one direction or the other, so that we can do the best to get our bias positioned correctly in everything that we do. I'm going to show you that now as we look at the silver chart. We're going to start out looking at the silver weekly chart. Now, I'm going to blow this out a little bit for you to see a little further, and you could see in this multiple time frame analysis, the basic part that we look at here is the weekly. That's usually where we started. So this is a weekly chart. I'm looking at 10 years of silver right in here. And I want you to note this very, very big cycle that you see right there. This is what we call the dominant cycle on this chart. There's another one right over here. There's also a minor cycle, that's the little one that you see there, and the intermediate cycle. We also have gold superimposed over it so that we can see how the gold and silver contracts act with each other or sometimes against each other. So this is a really huge amount of information that we have in here. And I want you to note in here that this big cycle was made up of 2 parts. So here's your intermediate cycle right in here. And when they nest, when there's this nesting right there, is when there is the biggest downside risk. So when you get the minor cycle, the intermediate, the major cycle, or dominant moving to the downside, you get your biggest declines. That's what you had right over here. Then when you get into the next minor rising cycle here, you enter into a rally period where all three cycles are pushing to the upside. This right over here, this yellow highlight, is the same thing as where we were right over here. So what I'm showing is that the small cycle here was bottoming and getting ready to push up. Now, when I saw the weakness in the markets, I was very concerned because we had some short-term things that look like breakdowns and I'll show you that. But the intermediate pattern in here was still solid as it got into the support zone. This is the 34-week moving average coming right up over here, crossing that fib confluence where this came down and tagged. So this is where they were all nesting in here. Also gold nesting in this area right over here. This was last November. We were looking for a low at this period. Then we got a rally, and we told our members we thought there would be a short-term low due somewhere between January 7th and February 3rd. That's been sitting there. And yes, that is what's happened in here. Now, we were cautioning that we needed to move up and get away from this area so that this was still in what we thought was good shape. And yes, we are now doing that. And now these are starting to point to prices up there in the at these fib extensions and resistance levels, which is, this is 28.86, this is 29.75, this is 30.95. And I got to tell you that because of the what we call the configuration of this cycle, the probabilities of taking out that high are like 75-80%. So we're just starting to move up, and that says to me that we could get some significant upward spikes. So this is a much improved pattern. And on top of that, with the Redditors now chatting about this, well, you've seen what they've done before. I'm not telling you that I'm in favor of market manipulation at all. It's just part of the market in here when you can exploit the shorts. And this, to me, is the perfect time for something like that to happen in here. So this is pointing to a move up into the low 30s when we look at that. There are other extensions up there, very significant ones, that are up to this level of like 33.25, which is a possibility. So this is quite a powerful looking pattern that when we look at it. Now I'm going to switch over here, and this is the daily chart. So we're looking at a 2-year daily chart, but I have it zoomed in a lot, and I'm looking at what we have in here are two harmonic families right there, where you have the dominant cycle and then the minor cycle right in here that you see. We also have the gold cycle over that also, and these are complex cycle structures. So what we show you is that the projection up to the upper levels where they could get to, and then if they were weaker, the lower levels. When they trade up into the top channel, it's really positive. When they trade in the top channel and then move down into this area, the bottom channel, and get under that level, that was a little breakdown, and that had us cautious. We looked for this low, like I showed you in the weekly chart, right in this location, end of January, beginning of February, and then this upward move. This is now also projecting up into this area of about $30 right there. So there is a very, very strong potential as this moves up to the top of this channel that we could see some pretty good upside movement. Now, remember that, you know, what's fighting the reflation trade is the deleveraging trade. Right now, I'm looking at the stock market, which is down roughly 2% on the day, and I'm seeing silver tick back down in here, and that's because when you get into a deleveraging period, then they sell everything. They don't have much of a choice. They just have to sell, and that's why you might get some backing and filling in here. But this is really looking to me much improved, and you get some calming in the markets, and you're likely to get silver moving pretty significantly to the upside. Let's just look at this again, and you can see clearly here we're looking at weekly cycle analysis here, daily cycle analysis here, the weekly cycle pointing to the upside, the daily cycle pointing to the upside, and the likelihood of getting up here into the into the area near 29 to potentially up over 30 right over there in coming weeks. That's what that looks like. So we want to keep our eye on that. We want to consider that the risk rewards are favorable to the long side in the silver market. I just want to give you another little peek in here of what's going on, and that is the intraday charts. Now I have this set up to 24-hour charts. This is a 30-minute chart right over here. This is an 8-minute chart over here. Some people like to trade 5 minutes. I think the 8 minutes give you a little clearer swings. And generally, when we do multiple time frame analysis, we put up the whatever the shortest time duration is here. We go to about 4 to 5 times that duration in this chart. This chart is our directional chart, whether we want to be long or short. When the slim ribbon is going up and it's long, the slim ribbon PO, this is the signal indicator in here, is green. When the 30-minute is green and the 8-minute is green and you get the positive signals, I just happened to mark these off for you, you get the biggest impulses. I always talk about impulses. When you get alignments of momentum with this being your directional component, this being your entry and exit signals, you get fantastic ability to get on the right side of the big moves. So clearly, when this was positive right over here, it set you up for the big move. That's the same thing. I'm just showing you the same time frame here on 30-minute and 8-minute. So you got 1, 2, 3 beautiful trades in here. Here's where this turned positive again. And I just want you to see that the market right now, I'm going to zoom in right over here so you can see that, and zoom in right over here that you can see that this is the reversal scout right over here. This is how we really get an additional sense of the directional change. Here you could see it flatten out and then turn down, and at the same time frame over here the momentum is turning negative. So that is telling you that the trade right now for the long side is not on, and it might actually tell scalpers that they could be on the short side, but we wouldn't really want to be making a long side trade until we got some sense that all of this was lining up again. So that's a look at the multiple time frame analysis, where we looked at this intraday picture right over here, where you could really get a sense for catching those quick trades if you're a day trader, or of course if you're a shorter term trader or even an investor. These charts right over here, they're pointing to, despite the fact that the market is pulling back in silver right now, that it's actually probably a buying opportunity. And unless we get into a massive deleveraging where the stock market is in collapse mode, and now I'm looking at this time of day, you have S&P's down 83 points. Well, it's getting close to that, isn't it, as we get into this free fall stage. It's key for this to hold up above those last supports and those last lows that we have in there. But this really looks like a very, very good pattern that we're looking at in the silver market. So that's silver on the weekly, and I think it is set up in a nice time period right over there. So wanted to show you that. So that's a look at the silver market. Hope you found that analysis to be absolutely fascinating. I have an important announcement for you. We've been offering our cycle analysis workshop at an extremely large discount. This workshop is something that I wrote in my 45 years of study of cycle analysis, and it took me a couple of years to create, and it was just a tremendous amount of work and a labor of love, and I share this with you. It's just absolutely fantastic. This is the final days now. We're going to end this at the end of this weekend. You're going to learn my method of analysis developed over all of this time. It actually took me about 6 months to record all of these things, and I finished that a couple of years ago. There are 20 video modules plus many tools for text videos that are connected to it. So the workshop itself is over 15 hours, but you're going to have about something like 40 to 50 hours of videos to be able to watch. You're going to learn so much about technical analysis and cycle analysis. You will never look at charts the same as you did before. So go to askSlim.com workshops for information. You'll be able to see a little video there in the table of contents. Matt has a demo reel he'll send you, so you get some little clips from most of the videos that we have in there. special 30% discount. We only do this about once a year. We're ending it now. We've been doing it for the last couple of weeks. We had a lot of people that have invested in this, and if you want to learn this type of analysis, now is the time to do it. For that special 30% discount link, write to Matt at askSlim.com, M-A-T-T at askSlim.com, and you'll begin the process. And it is a long one and a lot of study of learning cycle analysis. All right, so we're going to look now at the gold chart. Now, I just showed you the silver chart. If you happen to be watching a clip of gold right now, you're going to want to go back and look at silver. So let's switch over. Well, I'll give you a little peek of that weekly cycle analysis right there, and we'll switch over to gold right over here. So again, we're looking at cycle analysis on here. The brackets on the bottom, those curved lines, are what we call cycle brackets. They're a drawing tool here in Thinkorswim. Thinkorswim is our preferred broker, and you can get all of our charts if you want just by becoming a Thinkorswim account holder. You can do that through our website on the front page. We get credit for that, and become a level 4 member, and you'll get all of our charts. So this is just an absolute great way to understand how there is multiple time frames in here, where you look at that cycle right over here, which is the intermediate, and this cycle, which is the dominant. So this cycle rallied 13% in its in that intermediate cycle. This intermediate cycle 24%, this 23%, this 24%. You can see all of those on these beautiful cycle rhythms that are in here. So in other words, this cycle right over here is this cycle right in here. There was this nesting right over here which made the lows, and just as we said in silver, we were cautioning on minor breakdowns that we thought had it at risk. Now, the gold market's done better, though it hasn't gained that much this week. And again, because the stock market is selling off very hard right now, it's giving up its gains that it had right in here. So what we're looking at in the gold market is for it to hold this area down over here near 1800. And somewhere in here, over these next couple of weeks, we would expect that it might test this level. It might not. It might be able to hold up in here and then move to the upside. We really expect that silver is going to be the leader in here, and that silver-gold ratio is going to change, and that it will improve, in other words, or decline. Is how that comes out. So, in other words, the upside, silver will well overperform. I just think that the speculators are much more interested in silver. The pattern is much more favorable in silver. Still, we could see gold at record highs if it doesn't break under these levels and then gets into these more favorable rally periods. So you can see in here we have the dominant cycle right in here. That's this one projected up here into that fib extension to all-time highs. The intermediate cycle right in here, which is this middle dotted one right over there, and then these minor ones that we have the projections right in here. And this is a correction in the minor cycle. If this minor cycle is affected by these bigger ones, as we expect, it won't be able to fall much. It'll hold in here, and then when it's over with and you get into this next rising phase, that's when you can get some real upward explosions. So a lot really resting on how it acts here in these next few weeks. And we think that the gold market is going to be able to hold up in here, and helped a lot by the silver market, and be able to have higher prices as we get into the springtime for the gold market. If it breaks under 1800, it will be a warning. If it breaks under this level at 1767, it will be not good at all. It will be giving a very negative outlook. We don't think that's going to happen. We're really looking for it to hold up in here and to even take off on the upside, as we think silver will be doing also. So that is a look at the gold market. All right, that's it. So now we're going to take a look at something I think very, very interesting. For those of you that are new to what we bring here at askSlim, we just put out an amazing special for you. We have revamped, we're expanding our level 1 membership. The idea is that we want to bring in thousands of you. We want to bring in people that are not familiar with the amazing work that our team does and really be able to get a taste of it, spend almost no money. Our new level 1 membership, which is really the entry level, doesn't mean you have to be an entry level trader or investor, but the entry level to askSlim to really get a sense for what we're doing. And this is not entry level content that you get from us, believe me. You're going to get our Slimulator Momentum Tracker. It has over 1,000 symbols. You can scan and sort. What will you be scanning on? Our momentum indicators. We have them all built in with our algorithms in 3 different time frames. What it turns out is a sum of the evidence to give you a directional bias. This is for investors or position traders. It looks at a 3-month plus window. So a lot of what we do is for traders and short-term traders. You've seen that, but we built this amazing app that you access through the askSlim site. There's unbelievable sorting abilities, scanning abilities, and we have 20 different canned groups in there for you to be able to scan. You'll be able to see the percentage of gainers and losers, all of the directional information on all of them. It is amazing. It will blow you away. You're also going to get our stock index report, weekly report that's put out by Matt. Amazing technical analysis, charts on the major indexes, and all of our work that you see goes really into that. And again, it's a weekly, it's for a little longer term look at the markets. You're also going to get our Spider weekly review, a little longer term look at the major sectors of the markets. You're going to get this really is incredible, our new trader and investor workbench. You can organize, prioritize, you can save, you can track your analysis. We built worksheets in there for you to so easily put in to save the work that you do. You can put notes in there. You can upload charts. You can just absolutely have the easiest way to organize your work and save it and be able to call it back up. It's fantastic. You're going to get the askSlim show archive, the Market Week show archive. You'll be able to go in there and review our analysis and the things that we've shown in here week after week. We do live shows also for our members. They're about 70 minutes long where we do teaching and analysis and we answer questions. So you're going to be getting those live replays, and we're going to invite you into those live events at times, and you're going to get all of our member special videos that we put up also for our level 1 members, free members. We're going to make sure that you get those also. All of that, can you imagine? $14.95 a month, and if you take it for a quarter, it's $30. All of this, all of our amazing work, 3 analysts working for you. This is absolutely incredible. We want you to become part of the askSlim community. You will not believe what you're going to get when you do this. $14.95 a month. Spend $30 for the quarter. You'll get a good feel about what we're going to bring you and our workbench. It's just going to keep getting better and better. It's like a hub of the askSlim website and our analysis, and just absolutely fantastic. Go to askSlim.com to join. If you have any questions on this, write them to Matt at askSlim.com. $30 for a quarter for all of this. Go there right now and sign up. Thanks a lot. All right, so we're going to bring Market Week, a stock market analysis to you right now. But the stock market is sinking big. What is it sinking from? Well, the stock market caught what we just named it, SpecVid21 virus. Speculation virus discovered in 21. That's how it got named, by me. And that's the stock market that is moving down now very quickly. Maybe we'll even have some merchandise for you with that. SpecVid21 virus, it's what the stock market has just caught. Let's talk a little bit more about that where we looked at the 1 to 3 month view of the stock market. So we're going to put up the SPY chart, and I had the gold chart up here, so we're going to move it to SPY. Here is the huge upside move, and we'll look back here from 2016 and that mini bear low and that huge rally and the giant megaphone that's been forming. Now, all of these yellow areas that you see, if you're new to this show, are the areas where you get into the declining phases of cycles. Let me just get a little closer view as we look at this megaphone, and you get a good sense for how this lines up. So each of these declining phases, when each of these minor cycle and dominant cycles line up, is when the biggest risk to the downside comes. Some of them are small corrections, some of them are huge ones. This was 23% right there. This was 35% in the COVID panic, which was very anomalous because it bounced right back up. So this wasn't any kind of a bear market. For those people that say that the bear market ended and the bull market started here, well, that's a bunch of bull. I mean, it just does not qualify as a bull market, as a bear market, because it was just about 20 days long, and that's not what a bear market is. A bear market really causes indigestion, causes deleveraging, and that's not what we have going on right now. For the last number of weeks, and you can watch our year-end special, which is up on YouTube or on our website, we talked about the stock market making a higher high into early January, continuing and then likely getting into the period of risk between late January and early March. And that is where we are right now. You see in here, as you had that big decline where these were nesting right over there, you also had this decline over here where it did the same thing, 10.8%. And we talked in here about a decline of about 6% to 10% in the market right over there. And that decline that we have been talking about, you could see it very clearly beginning right now into the yellow zone. This is an engulfing pattern this week. It is a warning that something significantly has changed. This rally took you right up into this fib extension level right over there and is now turning down. We said that likely what was coming was a first leg to the downside and then an upside test in May, June. We still think that's coming. We don't know if this decline is going to take you only down to the support at 360 on the spiders, 353, 345, or down here, which would be about a 17% decline at about 321. So these are very, very significant support levels. We think that 6%, 10% is basically a given, that's what's going to happen in here. Why is that? Well, these cycle rhythms, they really speak to that. On top of that, the stock market caught SpecVid21. It's the virus that now has it. What is SpecVid21? Well, there are symptoms. The muscles of the market weaken. Well, you could see that happening as these FANG stocks start to move down pretty significantly. It gets very tired. The patient gets really tired from that. Also, what happens is the patient gets a detachment from reality. Well, you've seen that. GameStop, $500, AMC, these massive gains. If that isn't a detachment from reality, then I don't know what is. And then, of course, it has big mood swings. And that's what we're really seeing. And you can't really make it be better until it can lay down for a while and then maybe get some more oxygen. That is what's going on right now. This market has the virus, SpecVid21, and that is what's going on right now. Is this a major top in the market? Well, I don't really know that. I do feel like if we get a sizable decline in here, that we're going to get that rebound that takes you out into that period, out into that May-June period. In the meantime, the risks are high when we look at this. The timing really was right for this to happen, and you can really see that the patient is diseased. And this is just the beginning of the selling on this engulfing bar that you see right over here. Can the market come back from this with investors absolutely disillusioned, not understanding the market, having no clue that what it means when a stock detaches from reality, like GameStop, where you're no longer investing in the company, but you're just you're gambling, you're shooting craps, you're playing hot potato if you're buying it, hoping that there's the next fool that's going to come and buy it at a higher price. Investors are not going to want to be exposed in that kind of a market. That's what we have going on right now, and the risks are really high. I've been saying for the last 2 months, based on these valuations in the stock market, if you are not going to sell now, when will you sell? Probably never, because if this market gets hit big, you're not going to sell. You're going to want to wait for a rebound, and then you're susceptible to being caught in something much, much bigger. I've been talking about this period of risk, and it is here. That is a look at the SPY, the cyclical patterns, the period that we were in right in here where it nested to the downside, the period right in here where it's doing the same thing, and the time frame here is into late February, early March. That gives you a pretty risky month coming up right in here that we see for the stock market. Absolutely crazy market that we've seen in here, and I'm telling you, I've been a trader for 46 years. I've seen every bull market, bear market, and crash since May 20th of 1974 when I became a CBOE member, and I have never seen the craziness that we're seeing right now in the markets. And this is a market with risk. All right, so I want you to go to askSlim.com. I want you to explore that site, see all of our great information. Don't miss what we said about this $30 membership that you can get that has all of this fantastic content from us. So become a free member, and you'll be able to just get some of our emails, but become a level 1 member and take advantage of this great new level 1 membership that we have. $30 for 3 months. Come on. If you're watching this on YouTube, please do subscribe to the channel. Click that notification bell so you get notified when we put up videos. Make sure you like this video and watch our other member videos and the playlists that we have up there and past shows. Follow us on Twitter at askSlim, and also write to Matt at askSlim.com for membership info and questions on our huge offerings. Don't forget the workshop, the cycle analysis workshop. It's in its final days of this 30% discount. Please do take advantage of that. It's a investment. You won't be sorry that you did. That is it. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been